Mayuresh Joshi is joining us on this leg of the show. Mayuresh, 90 points higher as we kickstart our chat. Let me first ask you about the big pullback that we've seen on some of the consumer stocks, including ITC, for instance. ITC is up about 3.5%. Your thoughts if you're buying anything in consumer?
Afternoon, Surabhi. Again, I think the stocks in terms of the price movement had obviously run up quite sharply. And couple that up with the PE expansions that we probably witnessed and the earnings growth that these companies have historically exhibited, I think the PE expansion was far larger and greater to the earnings growth that they exhibited. But I think a lot of FMCG companies specifically have embarked on 2-3 brilliant moves. So the first move obviously is to entrench on their retail outreach, and that itself is going to be incrementally positive for these companies. The second element obviously is the way these players are probably having their SKUs planned out and the pricing points at which they're introducing new innovative products. And the third element obviously is the cost optimization programs, which a lot of these companies have run. So Dabur, for example, their Project Laksh, which is the cost optimization program, is being run very, very efficiently. You're talking about Project Pi for Godrej consumers. You're probably talking about what Britannia is doing in terms of expectations of almost 240 crores in terms of cost savings. The fourth element obviously is the input costs, Surabhi. And yes, input costs obviously are or were on the higher side. With the rupee depreciating, some element of that input cost can move higher.
Mayuresh, just hold that thought, Mayuresh, because there's a...
Before the day closes out, Mayuresh, just very quickly, a thought on Axis Bank maybe. Weaker stock.
No, so I think it's a welcome change. I think the management change that has happened, and in terms of their asset quality pressures itself, I think the recognition in terms of the provisioning that they've done, both in terms of what they've actually provided for and what they're expected to provide, I think the provisioning should come down. And the credit costs also should start coming down gradually. Sure. So again, as the retail advances improve, as the fee income also starts taking shape, and as the new management probably takes more control, I think the street is far more sanguine at this point of time. So I think corporate banks is where we still have our positive view, Axis, ICICI, where our belief is that the worst probably will get over the next 2 quarters. And retail advances, asset quality pressures coming off, NIM stabilizing and credit costs coming down will improve the return ratios.
Okay, Mayuresh. Ashwini, so this...
Just very quickly, okay, I don't think we have him. But Mayuresh, just very quickly, if you would like to leave us with any specific buy idea that you might have come across.
Yes, so something that we like is Lumax Industries at this point of Surabhi. I think the LED component clearly going to enhance the revenue visibility and the margin profile for the company. Maruti obviously is the biggest vendor for them at 32% of their overall top line, but they are increasing their lines for Maruti as well. It's a maintenance capex of 80 odd crores. The margins of LED lamps are far higher. They've got a technical partnership with Stanley, which obviously abets that technological upgradation and prowess as well. And the earnings growth should also improve substantially going forward, along with margin improvement at 10%. Not too expensive at this point in time either, so I think any staggered way of buying into this stock on declines is the best way that long-term investors can look at the stock.
Okay, all right, gentlemen, we'll wrap it up on that note. Thank you very much for being with us, and happy Ganesh Chaturthi to you and, of course, all our viewers as well. It's a midweek break, but we're not going anywhere just yet.